Welcome everybody to the third session of Sunday Insiders. This is me, Patrick Stockhausen here, presenting information for you that is going to put the edge in your corner, because most people trying to win the trading and investing game are somehow playing it wrong. 97 to 99% of the people, unfortunately, don't have a clue. So I want to give you the information. I want to give you my years of experience of trading, investing, losing a fortune, making large fortunes, trading a fund, all sorts of things like that, from my years of my hours in front of the screen, so that from my mentors who have given me invaluable, priceless information, so that you can shortcut your learning curve and get to where you want to be financially. So all these sessions are about how do you create wealth and how do you buy assets that give you financial freedom, because most people are trying to create financial freedom in the wrong way. They're doing the wrong thing with the money. So we're going to be discovering, we're going to be talking about that. So if this is your first time here, let me just give you a quick recap about what this whole thing is about. And this is all about the opportunity. That says to you, history has consistently demonstrated that for the individual trader, the biggest sums of wealth have been accumulated trading end-of-day prices, using nothing more than monthly and weekly charts. And that's what the whole basis of this is. How do you trade looking at monthly, weekly charts? How do you trade in such a way that you can create a vast sum of money? Now listen, you can make a vast sum of money doing high frequency trading, but you and I do not have the time, the resources, the team, the finances in order to compete against that game. So you want to play a game where you stand the biggest chance of winning, where high HFTs cannot mess up what you're actually doing. You want something that has stood the test of time. That is how I like to trade. I like to look at A, what has stood the test of time, B, find people who are incredibly successful at doing it, find out how they think, find out what they do, find out what their behaviors are, find out what their traits are, copy it, model it, create the results that they do. And that's what this series is about. So if that's what you want, then you are in the right place. Could you do day trading and apply some of this longer term stuff to create massive sums of money? Yes. In fact, I highly recommend you owe it yourself to be doing that. So that's what this whole series is about. Now let's get on with this. So here's what we're going to do in today's session. You're going to discover why I could show you the best wealth building opportunities and how to capture them. But if you have the wrong trading and money beliefs, you'll end up losing money and failing. So I'll show you, for example, the type of things that you need to believe about trading and how the game really is played and what most people are believing, okay? Now, I'm going to show you how to allocate your savings. Now, I say there's a presupposition in that statement that you are saving money on a consistent monthly basis, which most people aren't. Some people are forced into it in the 401ks and things like that, but most people aren't doing it out of love and out of pleasure. I will be discussing that. And I'll tell you how you need to be allocating your savings to make them grow and keep your wealth, and to grow and keep passive income sources, okay? Let's talk about your beliefs, and we'll start off with the beliefs that you have. That there is Roger Bannister, the first man ever to run a mile in under 4 minutes. Experts said it was not possible, okay? But in 1954, Roger Bannister does it. What's interesting is this. Prior to him doing it, ancient Greeks used to tie people to horses to try to make them run faster. The medical community said it was not possible, it wasn't practical, it was an impossibility. It's like man trying to learn how to fly by flapping his hands. It's a ridiculous notion. But this guy, so understand, for hundreds of years people tried it, no one's able to do it. This guy does it, right? This guy does it. And the funny thing was, right, not long after he did it, loads of other people did it. So they asked, how did you do it? He used to mentally rehearse being able to do it. He mentally rehearsed exactly where he would be at each parts of this track in order to beat the 4-minute mile. And he mentally rehearsed. He kept saying, so I'd be at that point at that time, 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 and I'd be at that point at that time. And he kept mentally rehearsing it, and that's how he did it. He won it in the mind first, okay? He won it. I'm going to say this again. He did the 4-minute mile in his mind multiple times. He saw himself doing it. Olympic and professional athletes and sports people, if they can't do a move or maneuver, they see themselves doing it in their mind many times, and suddenly they're programming their unconscious mind, which tells the brain the neurological pathways to produce a behavior, and suddenly they're able to do it. Professional traders, investors, peak performers, entrepreneurs, people that are going to sales, negotiations, they mentally rehearse how they want to conduct themselves and how they're going to maneuver before they attend or do the event or the sequence or the behavior many, many, many times. Now, understand, in the US Army used NLP. They modeled them. Modeling is this is what really NLP is about. NLP is not some techniques or some various or some hypnosis thing. It is about modeling human excellence. It is about finding people who are brilliant at something, finding out the strategies, the mindset, the behaviors, the actions, the thoughts, the sequence that enables them to produce the results, almost like a cooking book. It might take a chef, I don't know, 10 years, 20 years to come up with a phenomenal recipe. He writes down, he says, add 2 eggs, add 4 ounces of flour, add 1/4 of water, right, etc., etc. And they've written it down. And then all you have to do is just go, oh, right, let me take these 2 eggs and this flour and this water and mix it up. And then suddenly you're able to produce the result that took the chef 20 years to come up with it, right? So, the point is, that's what NLP is. It's about modeling human behavior and giving it to you so that you're able to reproduce the results in a fraction of the time it took the person. Does it mean that if you learn to model the world's fastest runner, okay, that you're going to become the world's fastest runner? No, because there is a such thing as genetics involved in that, okay? But would it mean if you incorporated their mindset, their beliefs, you'd improve your running? Yes, it does. Okay, so modeling. This is what modeling is. So they modeled the 2 best sharpshooters, and generally the U.S. Army in the shooting, in order to shortcut the class. Okay, so because the class went from, and when they did this, it went from having an 80% qualification rate to 100%. Now, what was interesting about this whole modeling thing was, as I said, there's different things that you model. Like one of the key things you model is what is the beliefs of somebody. Now, here are the beliefs of the 2 top sharpshooters. They said, shooting well is important to my survival. So they linked shooting to survival. Hunting is fun. Mental rehearsal. Oh, look, there's that word again. Mental rehearsal is important to successful performance. And if I miss a shot, it has something to do with my performance. Now, most people don't think like that. Most people think they blame people or the situation, anything but themselves. But by taking responsibility, it means you can adjust the circumstance. You can adjust your own behavior. If you think it's something outside of yourself, you're going to be constantly having to go at them. Oh, why didn't you just do that so I can do my thing? So those were the beliefs of the top 2 sharpshooters. Now, however, the worst sharpshooters, here's what they believed. Guns are evil and they kill people, or if I shoot this weapon too many times I might go deaf, or if I miss the target it means the gun is misaligned. Can you see how having certain beliefs would stop you being able to produce results just from those 2 separate types of beliefs? So those beliefs and those beliefs. I don't care what you know. So listen, let's imagine this is right. Let's imagine you go on the sharpshooting course, but you learn the best way to shoot a target from a distance. You know everything from the entry, the setup, how to hit the target, right, etc. Sounds a bit like trading, right? Meant to be. But you've got going around in your head, yeah, but guns are evil and they kill people, and if I shoot this weapon too many times, I might go deaf, or if I miss the target, it means this gun's misaligned. The probability of you being successful at this trading, shooting thing, rather, probably close to nothing. Does that make sense? So what is going around your mind? This is why you can know everything there is about trading, investing, making money, property, commodities, business, right? Paper assets, anything. But if you've got this kind of stuff going around your mind, you don't stand a chance from the very beginning, which is why I say make sure you got the right mindset, then find somebody who's getting the results that you want, then copy them, because then you'll increase the probability of you getting the results that you desire. Now, let me tell you about, we'll do this in terms of money, trading and investing. These are the kind of results and beliefs, and I'll tell you this, most people know I'm a bookworm, I like reading. I highly recommend, right? I highly recommend, particularly if you were brought up in a religious sort of way, or going to church or whatever, okay? I highly recommend that you read a book called Rich God, Poor God. Read that book and you'll understand why when I talk about this, okay? Because here's what's going around most people's minds about money. They go, money is the root of all evil, or if you're poor, you're more likely to be enlightened, or to make a lot of money, you have to do something bad, or most rich people did something bad, criminal or illegal to make money, or making large amount of money is hard work and a struggle, or getting rich is down to luck, or God will determine whether I'm rich or not, or striving for wealth will make me, will take away from me what's really important to me, or make me ill, and stuff. They've got things like this going around their mind, right? Now, in the same way how I've just shown you how these people have these beliefs going around their mind, I don't care what you learn about trading, investing, systems development. You could buy a phenomenal system. If you've got going that around your mind and you associate bad things with money, do you understand? You are trading. You are virtually the source of making money with money, but associating bad stuff with money. You don't stand a chance of being consistently profitable, because your brain now thinks and is designed, evolutionarily hardwired, to protect you. Now, if you think rich people are horrible and evil, and then you end up with money, your brain's going to be thinking, yeah, but if you get money, that means you're going to be horrible and evil. And you don't want to be horrible and evil, so what we'll do is we'll help you to get rid of it. How? Well, here's what we can do for you. You can make you not take trades, and we'll help you to take trades which are losers, because unconsciously we'll make you not see something which is there, but you'll see it once the trade has finished, and you go, why did I take that trade? We'll help you to do foolish things. We'll help you to do all the things you're not supposed to do. We'll help you to not be follow your rules. We'll help you to not be patient, not disciplined. We'll help you to see the things that will help you to do all the wrong things, because we don't want you to be evil. And you know what? We want you to be enlightened. And your brain's probably thinking, you know what? This isn't about you. This is about God. This has nothing to do with you. Somehow they don't associate spirituality with wealth, and wealth with spirituality. Where the ancient Greeks used to say, spirit without matter is expressionless, and matter without spirit is emotionless. You need a fusion of two, because the two biggest driving things on this world is to have a spiritual wealth and financial wealth. And by linking those two things together, history has shown those that believe they're doing something spiritual in building wealth, and building wealth is something spiritual, make a massive sum of money. But somehow people have separated these two things, right? Now, so if you've got that going around your mind, I'm sorry, but you don't stand a chance, because you've set yourself up to fail. So I'm not just going to leave you like that, just going, oh God, thanks Patrick, great, thanks. Right? So here's let me show you something else, right? Here is common mistakes people have about trading. Okay, they think, right, they're getting into a trade. Now they're not even consciously aware of the fact this is what they're thinking. Most people are, if you want to know what you're thinking, you want to know what you believe, look at your actions. If you want, and I'll say this again, if you want to know what you're thinking, if you want to know what you believe, look at your actions. Because if you did something, then ask yourself, what must I have believed in order to have actually have done that, or not done that? Does that make sense? Very powerful question. Ask yourself, what must I believe to have done that or not have done that? So here's the mistakes that people believe about trading, which will set them up to lose. The outcome is known, or the outcome must be known. Well, Patrick, surely you don't put trades on unless you know you're going to win, okay? Or you need to know what is going to happen next in order to make consistent money trading or investing. Now, I know most people can't get their minds around that. Surely I have to know that I'm likely to make money. Okay, knowing you're likely to make money or knowing what is good. Technical analysis. I will never forget this when I saw somebody in, unfortunately, he's passed away now, David Elliott's room. Good friend. Learned so much from the guy. So much respect for the guy. Somebody said, I can't believe my indicators let me down 3 times in a row. Right? So, and here's what they don't understand. And you've seen me or heard me or read it many times before. Technical analysis. Just please wrap your mind around this. And whatever you've got on those charts in front of you, they are not designed to tell you what is going to happen next on this trade. They are only designed to tell you what is likely to happen after a series of trades, 20 trades or more. Does that make sense? So it says statistically, big money, because you don't make yourself a winner. Most people think they do. It's not. Oh, if you get this, I'm telling you now, you're putting yourself ahead of most people. You are not responsible for winning in some ways. Patrick, that goes against what you just said, right? Bear with me, right? Your trade winning, that outright, is because big money came in the market. You buy yourself your one contract, your one option, or stuff like that. Nothing to do with you, okay? It's because big money came in and thought this is undervalued and let me keep buying this, buying this, buying this, buying this because this still represents value, this still represents value, and it goes up. It's nothing to do with you buying it. Technical analysis has nothing to do with telling you what's going to happen next. It's to tell you what's happening in the series trade. Why are you then responsible? Because you are responsible for finding the opportunities where you believe big money is likely to come in and push it in your favor where you win. If you can think like that, you are so far ahead, because that is not how most people think. They think, oh, the outcome, I can't believe that one didn't work. And they thus take responsibility that it didn't work because of them. No, it didn't work because you are trying to find an edge in the market that is telling you statistically big money is likely to come at this point in time, but you don't know where. However, most people think, surely you must know when they're going to come. No. Which is why they believe winning trades and losing trades happen in a known sequence. No, you don't. You have no idea. Okay? Or they believe when your trading edge appears, it means you should be making money on this trade. This trade. If I said to somebody, here's a trade, I don't know whether it's going to make money or lose money, which I say to people all the time. I don't know whether this was going to make money or not make money. Go, how can you put money down? How can you put all that money down? Because I know statistically in the long run I'm going to make money. Okay? Statistically in the long run. Now, also, they believe market patterns are consistent and reliable. That means if you believe that, that means you must believe that the same people come in every single time and make the trade go that direction. You don't know who. All we know is human behavior creates patterns. But in order for that pattern to happen consistently every single time, it must mean the exact same people came in and executed it in the exact same way every single time. And that's why that trade works all the time. But you don't know whether the people that pushed it that time made it work are going to be there, present or not. So, here is the truth that will set you free and make you rich. And if you want to know more about these, go and read Mark Douglas's book, Trade in the Zone. So, do you teach trading psychology or not then, Patrick? You tell me to buy these books. I do teach trading psychology. But what I specialize in is telling you how to actually apply it, which doesn't seem to be that common out there. As my mum says, common sense isn't common. I like to tell people, this is how you apply it. This is how you get it to make yourself financially free and rich and successful. Okay? So, here's the truth. Anything can happen. in the market. You have no idea what's going to happen with your trade. You just sit there and you just think, you know, statistically this might work, it might not work. I don't know who's coming in, who's not coming in this time. Anything could happen. It might win, it might lose. That flexibility of mindset sets you free, and it makes you see things which you couldn't see before. You do not need to know what's going to happen next in order to make money and trade in. Surely I must. No, you don't. In the same way a casino owner has no idea who's going to win and who's going to lose, they just know statistically the odds are in their favor, which you'll see lower down. There's a random distribution. You don't know. You just know out of 20 trades, if you've tested your system, 20 or 30 trades, that statistically within there, you're going to make more than you're going to lose, as long as you've got a good positive expectancy system. An edge, your trading thing is just a high probability of one thing happening over another. High probability does not mean certain or definite thing it's going to happen. It just means the probabilities on your side. Now, the probabilities don't necessarily mean you're going to win more times you're going to lose. You could lose more than you win, but win bigger 10 times what you lose. So you still have an edge. And every moment in the market is unique, because a trade which you put on, you have no idea who's coming into the market on that particular trade in order to push it in your favor. And as I've always said, and I'll say it again, there's only 3 ways in which you can ever make money in this world. 1 is you buy something undervalued and it goes up. 2 is you short something overvalued on the way down, right, and it goes down. Or 3, you provide a product or service of value to somebody else and you get paid for it. And those are the only 3 things. If you want more money, think to yourself, how can I provide or find more value in this world? And if just by doing that, by not focusing on only money, by thinking about how can I provide more value or find more value, undervalued or something overvalued, those are the only 3 ways in which money is. You start asking yourself that, you start thinking about that, you'll see more money making opportunities in the world. Now, right, so here is asset allocation, okay? You do this, you will make more money, right? You will make more money than you currently are, and the fear of losing and winning disappears in your trading and investing. You are able to control your emotions in your trading and investing in your financial decisions. You will accumulate and attract more money once you do this. You will be more strategic. You will be more financially savvy. You will be a financial genius. And people say, how are you doing that? The secret is not to have a phenomenal strategy. The strategy fits in this, and you will see this. And once I've explained this, you'll understand how this model fits within everything that I'm going to be teaching you. Okay? So, here is the mistake that most people make. Mistake 1, they don't save money. Do you know how few people actually save money? Okay, or they don't save a consistently progressive amount of money, right? They don't save money. Mistake 2, they pour all the, I've seen this many times, somebody that blows their account and they're going, oh, I just blown my 10 grand, 20 grand, 50 grand account, whatever it is. And they get 50 grand and they pour it all back into this thing, hoping to make a killing and pay the bills. That is a massive mistake. They don't really distribute their profits into other assets. Okay? These 3 things, making any of these 3 mistakes will mess up your financial trading and investing. And here's why. Rule number 1, I want you to understand, every single rich person in the world does this, right? You must save a progressively increasing sum of money and pour it into separate asset accounts. Now, in America, the average saving is 1% to 2% of their money. That's the average. Now, to have that, that means that is taken from the people who are saving massive percentage of their money to people who are not saving none. So to get an average of 1 to 2%, you realize most people aren't saving any money at all. Let alone saying, I'm going to increase the amount of money that I save. And people go, but Patrick, surely, Patrick, saving money isn't the secret to wealth. If I had a great strategy, I'd make a load of money. Now, it's interesting because I heard about a black woman that was in America who was paid no more than $2.70 per hour. Okay, $2.70 an hour. That's all she saved. Now, I reckon 99% of the people in this room, if you've got some form of income, you're getting paid more than $2.70 an hour. And if you're getting less than that or that, then you'll be glad to hear what I'm going to tell you. She saved a minimum of something like 17 to 20% of her money, whatever she was paid. She saved every single day. She saved it, she saved it, she saved it, she saved it, and she poured it into different assets, poured it into caught some of the biggest stock market rises and falls and big term trends. She didn't do any day trading, she just caught these massive trends. She recently donated $10 million to charity of her money, of her wealth. Not all her wealth, a proportion of her wealth, proportion of her wealth, 10 million. It is not the amount, it's the consistent habit of saving which will set you up to become financially free. And when you redistribute that money, in how I'm going to show you, this is how you become financially free, okay? So, you must save, and if you increase the amount that you save, you keep increasing this amount, you will become financially free quicker and faster once you do this. Now, to really save money and to keep increasing the amount you save, it's going to have to be high on your values. Because most people don't want to save money. Do you know what most people want? They want the money to spend on lifestyle and things like this, okay? I'm going to tell you, you can have that lifestyle. I'm going to tell you the easiest and the best way to have that lifestyle. However, by taking your money and spending it on lifestyle, the thing that most people really want, rather than having that deferred gratification, rather than doing the 2 marshmallows rather than the 1, you're stopping yourself from having a phenomenal lifestyle and setting yourself up for life to be financially free. If you have to have a value of saving money more than spending money, because people will spend money in the order or allocate it in alignment with what is truly most important to them. So if you have a high value on saving and you keep taking a proportion of your money and saving it and saving it and saving it, you could do what that old woman did who took $2.70 an hour and make a massive sum of money. You just make sure you say, the first part of all that I earn is mine to save, invest, and grow. Then, you know, spend the rest. But make sure you have in your mind the first part. Every time you earn any money, the first part. The minimum they say is 10%, right? 10%, 10%, 10%. Right? There are 3 places that you're going to get income from. Your salary job, some form of self-employment thing that you do, or your business. Now, understand, someone might go, day trading is some sort of self-employment thing. Okay, understand that is your income. That's one of the. I'm not saying it's an easy thing to do. Takes most people many years to be successful at day trading in order to have that as a consistent, reliable income source. Okay, and the whole point of that is to take a portion of that and put it into investments, which I'm going to talk about. But there are 3 places. And understand, you don't need to be doing that to be rich in what we're talking about in this series. You could have, like that woman, the $2.70, but keep saving a massive sum of it and you redistribute it in the correct way. Your self-employment thing, that could be some form of a doctor. That could be some sort of self-employed business, some sort of consultancy, some form of coaching. I don't know what it is for you, right? So you are the system in the self-employed thing, or you could have a business system. You take up a portion of that money and pay yourself first. Pay yourself first, okay? Most people have a problem with that, but I'm telling you now, successful and rich people pay themselves first, pay the taxes second, pay the lifestyle third, pay the business expenses last. Here's what most poor people do. They don't have a business, so they pay the lifestyle first. No, they pay the tax man first. They pay their lifestyle second, and don't have any money left to pay themselves. So, pay yourself first. And I always say this, and I read this, and I thought that's a brilliant concept. If you've got a job, let's say you're working 10 hours a day, I'll just say 10, so it makes it easy, right? You're working 10 hours a day, and you say, I'm going to pay myself 10% of this money. You sit there and you go, do you know what? This first hour is for me. This money in this first hour is for me. The other 90%, the other 9 hours, you're working for somebody else. Do you realize that? You're taking that money, you're going to pay for the house and this and this and this, the mortgage, the banks, the car, you understand, the bills, the utilities, whatever, the children's education. The money is going to end up with somebody else with 90% of those things. So you might as well go, this first hour is my money, whatever it is, or proportion of that money. Up to 50% of that money is mine, is all mine, okay? Then, once you get this money, here's what you do. You need to take a third of it and you need to put it into security assets. So let's imagine it was $3 you're saving, or $30, right? $10 goes into here, security assets. $10 goes into cash flowing assets. And $10 will go into capital gain assets. Say that again. Let's imagine you're saving $30 a week. $10 will go into here, $10 will go into here, and $10 will go into here, into capital gains assets. Set up 3 separate types of bank accounts to separate the money, divorce yourself from it, and say that money is, now you're going to have money, now we're going to start having money working for us. You're now starting to become a good money manager, an excellent money manager. Okay? Now, what's in the security bucket? Things like your insurance, things like physical gold and silver for fiat currency risk. You've got things like your home, right? Fixed interest payments, paying you an income from fixed interest. There's many different forms of that. Having cash. 3 to 12 months of living expenses in case something happens. Okay, you want that sense of, gives you financial security, going, you know what, I've got all these things sorted, and we've got money going to a 401k, or in the UK we call it a pension, and I think in Australia you call it a pension as well. But the point is, that's what that money is designed to do. Now, if you've got cash savings here, the whole point of those cash savings aren't there for you to be making big money on them. They're there for a psychological edge and a psychological buffer. Let's imagine you've got 100,000 in cash savings and you've got 10,000 in your trading. Okay, now and you lose your job. So your day trading goes terrible, but it costs you 30,000 a year to live. Do you understand that cash saving gives you this time and it balances you out, and you make better decisions as a result of it? So the lack of interest on the cash doesn't matter, because the quality of the decisions and all the other things that you do will more than compensate for it. Listen, I know people that have cash in safes, in their house, in a bank, in a vault, in another countries, under the floorboards. It's earning 0 interest, but psychologically they are emotionally balanced. You want to be emotionally balanced to make good decisions. You don't make good decisions when you're feeling fearful. You make good decisions when you're feeling good. So by having the cash isn't necessarily about making money on it. The cash, having that, is that sense of security, going, you know what, no matter what happens, if you sat there and you went, no matter what happens, I feel good, right? Because I know I'm sorted in any sort of situation, right? Then you will make better decisions in your trading and your investing, in your capital gains and in your cash flow and assets. So the lack of it is made up for it in what you do in all the other things. Does that make sense to you? Then you have money in cash flowing assets, business asset systems. And the reason why I've written the word systems is because a business is a system. Property investing, in many ways, these things are all businesses. They're sort of a business. Assets, okay? You're pouring money into business assets, property assets, paper assets, and commodity systems that give you only things that give you a cash. This is not trading, by the way. This is not your day trading or anything like that. This could be, for example, an internet business system, which is a business which gives you a consistent passive cash flow, for example, or you invest in someone else's business. You could invest in some property investment sort of scheme, and that you get a percentage of the rental income. I've seen how you can invest in hotels and get paid a percentage for people staying in the room. You could invest in, you could have diagonal spread. You could have, right, and that's a system. Does that make sense? You could own dividend stocks. You could put the money in sort of, no, and I'm not going to say the hedge funds goes into the other one, okay? But it could be, you might go, do you know what, I class hedge funds as a cash flow in paper asset system. Or you could invest in oil and gas. And there's many of those sorts of assets, which is why I'm going to have experts coming in on here telling you all about those. And there's multiple ones. You could be investing in, I know someone that manages garages. I don't know what you call them in the US. A garage, you know, where you park your car in it. And he was telling me about the returns on garages. It was phenomenal, better than owning property. So I'll have these experts coming in here telling you about all these different things. That is how you become financially free, because you are not working for money anymore. You are having money work for you, earning you money. You're doing what you want to do with your time, but you've got money working for you. Then you take a proportion, that other $10, business assets, right? You could a startup and invest in some sort of startup, and then an exit sort of strategy, or an IPOs, or those things like that. You're looking for pure capital gains. Property is like buying a property, doing it up, and then flipping it and selling it. Paper asset is your trading. That's your actual trading. Or commodity assets. Oh, I'm going to buy this bit of gold at this price, and I'm going to sell it at this higher price, which is different from having money hedged for inflation risk. Does this make sense? Do not think, oh yeah, if I buy an ETF in gold, it's the same as commodity assets. It's not. Diversification is not owning 500 stocks. Diversification is owning different asset classes. Does that make sense? That's what true diversification is. Once you've done this, right, you're now going to have money working for you. You're setting yourself up, because the secret now then is, once you get made a profit, you redistribute it. So for the capital gains, right, you could have a timeline. You might say, you know, every month, because of my trading, I'm doing a bit of trading, or day trading, or I'm doing swing or trend trading. I'll do it every year, or every 3 months, every 6 months. It's up to you, based on the frequency of your trading. You take a third of those profits and you pour them back into your capital gains, a third into the cash flow, so you're buying more assets to make you money, and a third into your security assets, right? Then you take your cash flow profit, you put a third back into the cash flow, so you're growing more assets, a third into security assets, and a third into your lifestyle. Once this thing here, your lifestyle, is paying for your bills, your expenses, your life, you are free. You will now be spending your whole time just managing money, and that's all you do. Or you could just keep doing your job if you absolutely love it. But that is how you become financially free. That is the real secret among secrets. That is how you become financially free. I met somebody, to consult with somebody recently, that was worth 200 million, and his, I'll just say, relative was worth 2 billion. Okay, because I don't want to, okay, not to say who it is. And they lost a vast sum of that money. Do you know why? Because they had it all in here. They did not redistribute the profits. You could put your money, there are people that teach property investment strategies whereby you're leveraging yourself up, leveraging yourself up, leveraging yourself up. But when the economy turned, they were screwed, right? Well, rather than redistributing the profits to keep themselves level and having diversification across the asset classes, that is the secret among secrets of managing your money and becoming financially free and rich and growing wealth and making trading. And if you start doing that, and you realize you'll have ends up like about 10% of your money in your day trading. Then if you lose some of your money, you go, oh, so what, right? You're not worried about it. It will grow. Now people start going, yeah, but this is going to take ages to grow, Patrick, if I do it this way. Let me tell you this right now. I know people have been trying to trade for 10, 20 years, trying to do it the other way, and they're no further ahead, because they're allocating your money enables you to manage your emotions. And as Warren Buffett said, do not expect to be able to manage money unless you can manage your emotions. So this is one of the most powerful things you could possibly do to manage your emotions. So remember, the essence of this is make big money from the trend. You either swing trading it on the big time frames, or you're going to do the big trend trade, so the swing on the trend trade. You then use whatever instrument you're going to use to get it. Then you take a percentage of that money, it's called asset allocation, and then you buy assets that give you cash flow for free for very little time. And that's how you really get free, and that's how you build massive wealth, and that's what this game is really all about. Thank you very much for joining us, and I look forward to seeing you all in the next sessions.